All right. Hi, everyone. Hopefully, everybody had good Christmas. Merry Christmas. Happy holidays. So, today we took two trades on gold and we stayed away from NQ. And I'll go over those trades with you guys. If you're new here, hi, my name is Ali. Go check out the homepage video for the strategy. And without any further ado, let's get right into it. So, today you didn't want to trade NQ at all. Look at this. You don't want to trade this mess. Like, there's nothing here to trade. We didn't close above this, we closed above this. But yeah, if you would have traded a pre-market, you might have gotten something out of it. That's why sometimes I trade the pre-market because the opportunities are better. Can you get her out before I? There we go. Thank you. All right. Let's see. Yeah, never mind. There wasn't even any trade before pre-market. Yeah, nothing. Yeah. When you see this, you just want to stay away from it. Don't even touch this. That's at least what I tell myself every time. And on here, let me just kind of use the bar replay so y'all can see my way of thinking. So we see price. So the 8 a.m. candle close above this. I usually only pick two POIs that are kind of far in between. I don't pick the most recent one and I don't pick the first one. I usually pick somewhere in between. As you start trading this model, it'll come more naturally. So that's why I picked this area and this area. Because you don't want to put too many lines. You can put a line here, put a line here. You're going to have too many lines. This kind of makes sense because they're very equal. Like the distance between each of them are very equal. So that's the logic I take when it comes to training that. And today was a very busy day at work, so I couldn't really trade it the way I wanted to trade it. That's how I was. That's how I missed a trade. I didn't miss it. I just didn't. I wasn't able to take full advantage of it. And then the second one, when I took it, should have been a break even that turned into lost. I added a new indicator to my overall trading chart. It's called ICT High Time Frame Candle. I find that a little bit helpful when it comes to looking at the higher time frame because it'll show you the hourly right away right next to you. So right around here, I was at work. I set my alert in here and here. I was like, if the price comes down here or here, if I say inverse for value gap or closure above the lines, I'll take it. So around here, my alert went off. Let me just turn off this one so it's simpler to see. So this is my thought process for those of you who are interested in. So I'm like, okay, we closed below this line. We created a fair value gap here. So I'm like, okay, we're gonna see if the price is gonna go below this, and then we'll take whatever candle is here as a measure. But we didn't. We sorted it, but not really, and we didn't close above it anyway. So now we need to flip this candle and possibly inverse this gap. And the reason why I want to do that is because we are fighting the overall trend, and this is a very high probability setup. It's a nice V-shaped recovery. If you see too much higher lows or higher highs, the trade is more than likely to fail. And in the second example, you'll see what I'm talking about. When you don't see much of any resistance, it's just the price tumbling down to grab more liquidity and then shot up. That's how you know it's a good setup. So now all I'm waiting on is a inverse gap and then maybe in the straight. And I'm doing all this stuff while I'm at work. I'm listening to everything. I'm trying to talk to customers and clients and talk to the managers, and I'm trying to manage the trade. So I saw this, I got this alert. I pull up my phone, but what I did, I set a limit order right here. So let me just get rid of this. So we created this massive fair value gap. So I'm like, okay, we have this entire fair value gap to go based off. So the price most likely always comes down somewhere in this line and before it goes up. So that's what I did. Instead of getting into the trade right away, which I should have done, I set a limit order right above them this week. So because the price is fractal, even on the 1 minute, the price does the same thing. So I was aiming for this. So usually a limit order is good to put it on top of the previous week in the fair value gap. Here and here. So in this case, it would have been better if I would have put my limit order in here instead of here. I put it right on top of it. I put it somewhere around here. And I target this liquidity. I put this one as break even because when it goes halfway through, I put my stop loss to break even. The price came back, got extremely close to my limit order and didn't take it and start going up. So I should have put my limit order on this one, on the most recent one. And my stop loss is at the point of invalidation, which is below this fair value gap. If you're bullish, we shouldn't come and visit all the way down below. That's why I didn't choose this area. If it's a smaller amount, then I choose that area. But if it's not, I just let it be around here. It comes with experience. If you're not used to this, you wanna put it at this area. This is like the true point of invalidation. This is a little bit more aggressive. So in this area, I just let the price go up. I mean, I didn't let the price go up. The price just went without me. And when I opened the chart, I saw the price around here, and I choose not to get in. I usually don't chase the trade. If you miss the trade, you miss it. It is what it is, and it just went ahead and hit our take profit very simply and easily. So that was that one, and the price went ahead, and we were somewhere around here. Let me show you guys what happened. So yeah, I'm not gonna do ball replay on this one. So yeah, we had our target in here, and this is a pretty good one. The price came below our POI, closed above it. Not only closed above it, we got an inverse fair value gap, and we closed above it, above the POI. On this one, I got in right away. And the reason why I got in right away is because we don't have a lot of room. There's no fair value gap for me to sell limit order. So that's how I think when I set limit order. So, and then this was our break even. And this was a low probability setup. This was a high probability setup. And what makes this one a low probability setup is because the price already came and hit this POI. The price went up, got choppy, fell to hit that liquidity, came back down, chop, 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 made multiple swing high, and then finally came, and then we got another one. So this one should have been either a break even or a quick base hit, like a quick 1-to-1, kind of like this. But when I placed my order here, I had to go take care of something at work, and I left my stop loss right below this swing low, this 1 minute swing low. And once the price hit around this area, I got my alert, but I was too busy. I couldn't move my stop loss to break even. And by the time I got into chart, the price already hit my stop loss. I knew it was gonna be a little bit of low probability setup because of this price action, and it should have been a break even or at least a nice base hit. And as you can see, the price just dumped, and then I didn't get on the chart for the rest of the day. Those are the, I would say, this was pretty much the only good opportunity that was available on gold, and no opportunity on the on the NQ. That's the video for today. If you want to learn more about it, come join the community, school community. We already have 600 members. Ask me a question, post your charts. People are posting their wins and losses. It's pretty cool. We have more wins than losses that people are posting. Everybody's very active, and we would love to have you. Yeah, that's it. Love and peace until next video. Peace.